do you try and assess this R star on a running basis, or how do you view this long-term neutral rate concept from a tradable perspective?
Yeah, well, I think I think it's more efficient. R star, like who the heck knows?
Yeah.
Put seven economists in a room, get seven highly optimized econometric models that are now saying something totally different. Like who the heck knows? So I think R star itself is not that interesting, other than to say I think on the short end there's a lot better sense as to what's going on, in the sense of you can understand whether money is tight or easy by what's going on with economic conditions and we've had interest rates on the short end and the long end basically at this level for the last 18 months, give or take, and the economy has had 7 quarters of at or above potential growth. Okay, well, that answers your question. Your basic question is, are interest rates, is this a roughly neutral interest rate, or is this
Hmm.
incredibly tight interest rate? And I don't think you'd get those empirical outcomes if it was actually an incredibly tight interest rate. So I think that empiric approach, I think, is the main way that you can understand whether money is tight or not. And then, of course, you start to think about it incrementally from there. And in particular, I think start to think about what the term premium is. And that term premium, today is basically where it's been on average in the post GFC period, which is about zero. And you can start to ask yourself, well, do the structural macroeconomic conditions, do they align with a term premium that is consistent with what we've seen in the post GFC deleveraging, or have the macroeconomic dynamics changed? Higher inflation pressures, better productivity, better population growth, more structural, demand for capital relative to supply. Like all of those things point you in the direction of the fact that we should have a bit higher term premium than where we had before. But yet, it hasn't yet moved because we've had those long only asset managers keep bidding every time you get an incrementally higher rate.